Hello, ladies and gentlemen. Good morning. Welcome to the show. Listen, I'm glad to have you guys here on this. On this, it's Wednesday, the 12th of August, 2020. Thank you for tuning into the show. Listen, I'm going to make my case right now for triple-digit silver. You don't know what triple. What I'm talking about is silver that's over $100 an ounce in the next 12 months. First off, we're entering into a period right now where it's almost a perfect storm for gold. It's an environment that's extremely favorable for gold. The Federal Reserve right now has to control the long end of the yield curve with the long extension bonds, the 10-year, 30-year. These bonds right now are tending to drift upwards in price. That's the tendency. And the Fed can't let those bonds move up too high in price. The long maturity bonds. They're already talking about different programs to control the entire yield curve, not just the short end, not just the short maturity bonds, but the long end too. They're going to have to control the whole thing. This creates a scenario for gold that we haven't seen before, like a perfect storm for gold to go up. And so I'm expecting the gold price probably within the next 12 months to exceed $3,000 for gold in this type of environment that we're in right now. Now, silver is a totally different animal. It's used heavily in industry. What we've got going on right now with this disease, well, let's just face it, an awful lot of the mines are not going to produce this year, not going to produce like they were producing. We were producing in silver in excess of 800 million ounces a year from the mines, and this was just keeping things going. Industry took a lot of that, and bar and coin demand takes a lot of that 800 million ounces. But take a look at the mines right now. If they are working, they're having to maintain social distancing inside the mines. And this means that, they're distributing. You try working with heavy breathing equipment down in these mines, I mean, things like have to wear a face mask all the time and everything, and it just cuts your oxygen supply, and you're not allowed to get close to your fellow worker. Even the mines that are working, their production is just going to fall off a cliff. Now, I'm gonna be very generous. I'm gonna say that instead of 800 million ounces, that I'm going to be very generous and say we produce 600 or 700 million ounces. But I think when the final tally is done at the end of the year of how much mining production of silver actually come out of the ground, we're probably going to be looking at probably 500 million or something like that. So, probably going to be ridiculously low. Might even be 400 million ounces. What we're working on right now, the silver, if you go out and you buy silver and you actually get some of the physical, if you're lucky enough to get some of the physical right now, what we're working on is what we did in the past, what's left over from the past. And we were keeping up with things. We were having 800 million ounces a year, roughly, or a little bit more. Bar and coin demand was not that great. It took some, and the industry took the rest. Yes, industry has dropped off a little bit, but it's not dropped off a cliff. China produces all kinds of things like solar panels and things like that. Their factories are still working in China, and consumers are still buying things around the world, and industry hasn't fallen off that much. From what it needs to continue on making iPhones. Every time they produce an iPhone, there's silver inside it. Every time they produce an iPad, there's silver inside it. Every time you go out and buy a television, there's silver inside it. when they create these different weapons of war, uh, like there's silver inside. There's large amounts of silver because there's tremendous circuitry inside everything. When they produce a cruise missile, there's like 100 ounces of silver inside it, and they can't make it without the silver. We are heading toward major issues. I'm going to call them issues in the next 12 months of silver availability, because the people that own silver, they're not going to sell it. Not when they see the price going up. And, we had this move to the downside just in the last day or two. Did you guys know that they actually use paper short contracts to lower the price of silver on the COMEX? They were 2 billion ounces were traded in one day. Now, in normal production, we produce 800 million ounces a year, so that would be a little bit more than 2 years of mining supply. It was traded in one day on the COMEX with their paper SLV short contracts. Right now, with our production, we're probably only producing in the whole world probably 500 million ounces a year. It's going to leave an enormous shortfall. And industry is going to panic. They're going to want silver. They put it on sale for us right now. But the prices bounce back some, Now, what we're looking at? We're looking at such a shortfall in silver coming up. Industry panicking, trying to maintain a supply of silver so that they can produce their products around the world. Bar and coin demand going through the roof, demanding silver. All of it's coming at a time when the mines just aren't producing. And this is going to be made manifest more and more as the next few months progress. As we move toward the fall and into winter, it's going to become more and more obvious that silver supply is in short supply, and these industry and these companies rely upon silver to maintain their production lines are going to absolutely panic, and they're going to try to allocate a extra supply to see them through this period. They buy into the 1,000-ounce bars. They're going to be scooping them up as fast. It's going to be trying to allocate them at any cost. That doesn't leave anything left for the mints that use the 1,000-ounce bars too to create these new coins. They've got to make their blanks, and it's just everything's gonna start to bind up. And this is going to mean that the price is going to start to shoot up. I'll tell you what I'm expecting, guys. I'll get to the nitty-gritty in the next 12 months. Because of these allocation issues and issues around trying to obtain the physical metal, I'm expecting the silver price to actually go to 30 to 1 for gold. This is what I'm expecting. Because there's not going to be as big. There's going to be issues around gold supply and obtaining gold because of the financial conditions in the financial system. People are going to want to start to allocate more and more gold for their financial portfolios. And real physical is going to be what they want. So there's going to be constraint issues on gold as well. But silver is going to be nothing like it. We're actually headed toward shortages. We're already actually entering into the front side. Just the very beginnings of these shortages in silver is just starting. It's going to get a lot worse. And I believe that this is going to move us all the way to a 30 to 1 gold to silver ratio. When gold is going to hit $3,500 an ounce, more or less, probably within the next 12 months. It's going to creep up and up and up, the gold price. And we're going to see silver more than jump. So to a 30 to 1 ratio, I'll just do the math for you real quick. A $3,500 gold and a 30 to 1 silver ratio is well in excess of $100 an ounce, like $111 an ounce, somewhere in that area. And I mean, okay, I understand that they're trade. It's becoming a farce now at this point. You know, the paper short contracts for silver. It's becoming a farce. And they can set the price on that anything they want to set it. It doesn't matter if you can't obtain the real metal. What's the price on the real metal going to be? And that's what I'm talking about. You know, first off, you're not going to be able to get it. But if you are able to get it, it's going to be in excess of $100 an ounce. Meanwhile, on the COMEX over there, trading the paper stuff, they actually might be able to actually keep that price down so low that it becomes, in the end, it becomes just a joke. It's just trading paper back and forth, and paper has no value. In the end, that price might go. I mean, there is a possibility, and we have to explore it right now, that price just could go lower and lower and lower. So you go to your local coin store, and he wants $155 for an ounce of silver if he's got any available. And on the COMEX, it's trading for 4 cents. But it's all just paper. And you can't settle for anything but dollars. A ridiculous scenario going on. But it's becoming more and more exaggerated, this scenario. Already it's pretty exaggerated, you know. But it's not got to the point where being completely ludicrous. It's heading toward that point. If they don't let go of the... And something doesn't happen to match the spot price with the actual price where there's a premium on silver and you can actually buy the real thing. This is going to get ludicrous. It's going to get really, like, silly, almost to the point of being silly at a certain point. Where the spot price might be like 3 cents on silver, and the real price, if you want the real thing, might be well in excess of $100. That would be silly, wouldn't it? Everybody can agree on that. But that's where it's headed. It's heading more and more into that silly territory, where it becomes more and more obvious that the paper price doesn't represent the real physical asset. Anyway, let's move on with the markets. Let's get started right here and take a look at what's going on today. We're looking at the silver price bouncing back. They had it below 24 bucks. Now it's at 25.77. And we're looking at it making it almost halfway back to where it was, up around 29 bucks. It's almost halfway back. And this is with them actually, quite literally, dumping 2 billion ounces of physical, not physical, but paper silver into the market to try to knock the price down. And still, it's bouncing back, you know, and it's bouncing back because, well, this is going to, I think that this actually could get silly in the end, really silly. Let's take a look at cryptocurrency. Oh, first we got to check gold. We didn't check gold. Hold on, guys. We're going to check gold. Gold is 1946. Gold's bouncing back, too. You know, they had gold down almost as low as like 1875, something like that. You know, and now it's 1946. It's bounced back $36 on the day. Cryptocurrency, 357 billion. Bitcoin dominance 59.8%. I'm going to tell you what, guys. We got a Bitcoin price of $11,585, but I'm going to tell you what, guys. That Bitcoin dominance has really dropped. Boom. And that's a big indicator for me in this marketplace. What it means is people are buying in heavy into the alternative coins and lowering the Bitcoin dominance. That is a real bullish sign for crypto. We could see a little pop in crypto because that's the biggest drop I've seen in weeks. It was like 60.5, and now it's dropped down to 59.8. The Bitcoin dominance. That's a real bullish signal for me. The fact that there's energy moving into the alternative coins, alternative to Bitcoin right now. A lot of energy moving into the alternatives. But Bitcoin price hasn't really went down that much. It's still 11,585 today. Okay, let's move on with the markets and take a look at the Dow. It's up 264 points on the day so far. That's quite a big jump. 27,951. It's heading back to crack 30,000 again. It just keeps going up and up and up. But I'm going to tell you, this market right here, it's totally reliant now on what the Fed does. Every breath and every word that comes out of the Fed's mouth means everything to this market. And how willing are the Fed to keep supporting this market? Because they're the only thing standing between this market and doom. Is the Fed. There's no real good fundamentals behind it or anything. The people out there are just buying about 4 or 5 of the biggest stocks out there, Amazon and Microsoft and stuff like that. They're just buying the big ones, and that's what's pushing this market up. And it's just like all the money, and they're being pumped. Those big stocks, the big name stocks, are being pumped right now. It's a pump. And, if you've ever listened to anything about the markets, you've always heard the word pump and dump. Pump and dump. Pump and dump. Basically, this is a big version, a really big version. You hear that term used like in things like penny stocks and stuff. But this is a really big version of the pump and dump. Okay, look, we got oil today at 42.49. It's up 88 cents. Now, that's quite a big leap for oil. It's over 2% up today. But it's been hovering in around 40 bucks. But we got a little bit of strength coming into oil today. Let's take a look at U.S. Treasuries. Now, see, this is their problem. They're being able to support that short end of the yield curve really good and keep those yields down. Look, their yields are all down on the short end today. But look at those. The long term was rising yesterday, and it's rising again today, and it's starting to get a little bit substantial. The amount the long end's rising. Anything past the 5-year has been rising, and it's rising again today. It's over 3 basis points in the 20-year. It's 2.8 basis points in the 10-year. The rise. And over 3 basis points on the 30-year. It's that long end that's frustrating them right now. They got a little bit of loss of control in the long end. Effectively, they're gonna control the whole. They're gonna have to control in the end. Have to control the whole yield curve, all the way out to the 30-year. The Fed's gonna have to control it. Otherwise, it's going to start to run away from them on the long end of the yield curve, and the yields are going to get too high. They got to keep them down. Once they start, though, controlling that long end of the yield curve, that's going to be a bit major pusher for gold, for the price of gold. And they're going to have to. They just can't let these keep creeping up like this way. They got to keep these yields down. Let's take a look at the U.S. dollar index, 93.34, and we got a falling dollar today. It's not falling substantially, but, I'm expecting it to break down at a certain point, not too far in the future. I'm expecting it probably to break down below 90 into the 80s again, the U.S. dollar index. And that's being compared mostly against the euro. And, they just made nearly 2 trillion new euros. And we see a falling dollar, our dollar should be skyrocketing to the moon. Should be over 100 on the U.S. dollar index right now, with the euro creating 2 trillion new euro units, I would think. This is major weakness in the dollar, the fact it can't even hold its own against the euro, which is a piece of garbage. Honest to gosh, guys. We're living in bizarro land times, with the market going heavenward, just keeps going up and up and up. And gold and silver are being suppressed, with 2 billion ounces being traded in one day. It's like right now, with this weak mining supply, which probably really only about 400 million ounces a year, that would be like 5 years of mining supply, if at 400 million ounces a year, let me see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 3, 4, 5, 6, 7. Yeah, 5 years. That'd be 5-year mining supply at 400 million ounces a year, which is probably what they're bringing out of the ground right now, considering they got to maintain social distancing in the mines. They only got half the people working. They can't. They got to. They're like, they used to send. How many guys are going to send into the left wing of the mine today? Down into that shaft. to dig out the ore. This is the way it used to be. Well, we're going to send 20 men down in there. Well, now we got social distancing. How many guys can we send down in there? 6 total maximum. Because they got to maintain 30 feet between each one of them. You know, and so when it comes to how much silver are we going to haul out? Because we only got like 6 guys working in there, and we used to have 20. Well, we're only going to haul out 30% what we used to haul out. Well, we used to get 800 million ounces a year. We'd be lucky if we get 400 million this year. So we got China still pumping away with their factories over there and factories all around the world because there's a shortfall of goods in the world right now because nobody's been buying anything for a long time. All of a sudden, everybody's going to start waking up because, hey, you know, the coronavirus is starting to move out. And people are going to start going shopping again and stuff because of all this new money the Fed's printing. There's going to be no merchandise to buy because everything's going to start to bug. There's going to be like major blocks to everything, like trying to, especially silver. The guy's going to order up, say, well, we can't make these products right now. We can't get the silver to do the electronics. We can't solder. We can't buy any silver solder or whatever. It's going to be all around the world this way. And companies just in a frantic effort to try to obtain something real physical, to buy a few 1,000-ounce bars, which is where they get their silver. There's going to be a shortage. Massive shortages. And the people that got silver stackers and stuff, they're not going to start selling until the price gets substantially higher. You know, yeah, we probably did have a few guys get shook out of the tree during this move down in price. They got scared, you know. A few guys probably went in and sold some of their silver when it was up near $30. And right now they think, oh, well, I did great, you know. I got nearly $30 an ounce for my silver. And I made a profit and all this kind of stuff, you know. That's the only silver that's keeping them going right now. Because there's hardly anything coming from the mines. They want to shake you out of the tree. And, you know, you're going to be crying because you sell it for 30 right now, and you might be able to sell it for 150 before a year's out from now, 12 months from now. You know? Don't let them shake you out of the tree, guys. Hang in there tough. We'll see you guys in the next show. Give me a thumbs up, and we'll catch you guys later. Bye-bye.